Joe Biden continues to be just an absolute horror show of a president. The polling for Joe Biden gets worse and worse and worse. There's one particular poll I want to talk about here. This is a Quinnipiac poll. According to Quinnipiac, Joe Biden's job approval is now at 36%. 36%. So about 1 in 3 Americans actually thinks Joe Biden is doing a good job. 55% of Americans think he's doing a crappy job. His approval on the economy is at 34%. By the way, he has not hit the bottom yet. He has not hit the floor. See, the thing about Trump is that Trump had a very solid ceiling. He was never going to break about 47%. And he had a very solid floor. He was never going to break about 38% at the bottom. Joe Biden has no ceiling and no floor. When he entered office, he had a 60% approval rating. And now he has a 34% approval rating on the economy. And it is going south, and it is getting worse and worse. What are Americans' top concerns? Their top concern is inflation. 30% say inflation is their top concern. The invasion of Ukraine is their second concern at 14%. And immigration is at 9%. Now, this is nightmare territory for Democrats because inflation is not going away. As we'll get to in a second, the economy is on razor's edge right now. The invasion of Ukraine, despite the fact that Joe Biden says that he has rallied the world behind his cause, he has not actually ended the war in Ukraine. And when it does end, it is likely to end with Vladimir Putin in a strengthened position with regard to, for example, oil fields in eastern Ukraine, as we'll get to in just a moment. And immigration is the one that really is lurking here. Because if you think that the immigration issue is dead, it is not dead by half. As we'll explain in a second, we're about to see a massive, unprecedented wave of illegal immigration over the course of the next couple of months, facilitated by this administration. Even Chuck Todd on MSNBC, he's saying this administration is just cratering. I mean, this is like the dinosaurs. Joe Biden, the dinosaur, is looking up in the sky and he sees the asteroid headed for Earth. And all he can say is, here's Chuck Todd explaining.
When Bill Clinton and George W. Bush had midterms that went their way, their job approval rating was right around 50 or north of it. All right. When you start dipping below 45, you've got a problem, and you're going to have midterms that are in the bad to shellacking ratio. President Biden's at 40. George W. Bush was at 39% in 2006. We know how that turned out.
Wow. And you never want to be in the shellacking territory. He's about to take a shellacking, according to Chuck Todd. Meanwhile, how deep are Democrats in their own colon? So they're already talking about 2024 and where they're going to host the 2024 party convention. And they're now talking about doing it in Chicago. Geniuses over here. Want to win those big Midwestern states. So you pick the bluest city in the entire Midwest that is rife with crime and run by one of the most unpopular mayors in all of America, Lori Lightfoot. Genius type stuff right here. It makes perfect sense. Meanwhile, Republicans are looking at Milwaukee and Nashville, both of which make a lot more sense. Nashville is cooking. I mean, by the way, we heard the Daily Wire. We know Nashville pretty well. Milwaukee is pretty good. That'd be a fine place for the convention. Chicago for the Democrats. Man, they're in such deep trouble. And on the economy, they're in even worse trouble than I think they know. So Larry Summers did an interview with Ezra Klein, formerly of Vox, now of the New York Times. Summers has been predicting for a year that serious inflation was on the way. Now remember, the entire Democratic Party had gotten so far beyond the point where they thought inflation was a real thing that they had embraced something called modern monetary theory. Their theory was you could literally just spend money for the rest of time with no limit whatsoever, which meant, according to the modern monetary theorists, people like Elizabeth Warren, that the only thing separating America from greatness was just the willpower to spend. There was no reality where if you spent too much money, you'd inflate the economy and you would end up with massive price increases that take a chunk out of American savings and act as a giant tax on Americans. And that would never happen. Well, here's the thing. It did happen. So Larry Summers predicted that. And now, Ezra Klein over at the New York Times, who was very critical of Larry Summers, he was like, yeah, it turns out that might have been wrong. Turns out that Larry Summers was right. So now Larry Summers is going further. He's saying this is not just a problem of inflation. He's saying that we are basically going to fall into recession at this point.
I think the likelihood is that we will not return to 2% inflation without having at least a mild recession. I think that the magnitude of the imbalances and excess demand in the labor market are sufficiently great that the odds are probably 3 and 4 that we will not get inflation down without running a recession.
Well, this is a disaster area for the Democrats, like a full-scale recession. Listen, I got it wrong. I thought when Joe Biden took office that he was going to have at least 2 years of a good economy before we had a slowdown. Because after all, the pandemic was coming to an end. We had a working vaccine. People were going to get back to work. he wouldn't be stupid enough to superheat the economy. He wouldn't be a moron enough to pour gasoline on a raging fire of demand. Now when there are supply chain shortages, I mean, it would take a complete dunderheaded moron to do. Oh, he did what? Or no. By the way, how bad is inflation? According to one Bloomberg economist, Americans are having to spend, the average American household is spending $5,200 more compared to just last year. $433 per month more on the same goods and services last year. That's how bad inflation is. It is worth $5,000 to you and your family. $5,000 a year. That is a lot of money. That is not a minor problem. That is a massive problem. These economists say accelerated depletion of savings will increase the urgency for those staying on the sidelines to join the labor force. The resulting increase in labor supply will likely dampen wage growth. So people will need to go back to work. Employers may be able to lower the wages when that happens. But in the meantime, inflation is going to maintain. Now, you might think at this point that the Biden administration would do something differently. I mean, after all, the alarm bells should be going off. According to MarketWatch.com, a closely watched measure of the yield curve that serves as one of the bond market's most reliable recession indicators inverted on Tuesday, underlining fears about the economic outlook as the Federal Reserve considers aggressively hiking interest rates. The widely followed spread between 2-year bonds and 10-year Treasury yields intermittently dipped below zero. It's down from more than 160 basis points a year ago. The last time the spread inverted was August 30th, 2019. Traders are responding to the likely need for Fed policymakers to deliver a larger than normal half-point rate hike and possibly more soon in order to combat inflation. Jerome Powell had opened the door to that a little bit earlier this month. According to Mark Haefele, a chief investment officer at UBS Global Wealth Management, the risk of an abrupt slowdown or recession has increased, along with the prospect of a swifter sequence of rate rises from the Federal Reserve and disruptions due to the war in Ukraine. They were too slow to hit the interest rate increase button, and so now they're going to have to slam on the brakes, and people's face is going to hit the steering wheel. That would be what that recession feels like right there. Meanwhile, even Biden's own economic advisors are saying, you know what we need to lower the gas price? Wait for it. Oil supply. Here is Biden economic advisor Brian Deese saying we need more oil supplies. We'll find out in just a minute. This administration has no intention of increasing oil supply.
We need more supply of oil in the short term so that we can bring down prices, because it is the case that the gas is up about $1 because we have shut off access to Russian oil to the global market. We've done that. It's the right thing to do. Democrats and Republicans alike supported that effort to end imports of Russian oil. And now we have to bring more supply on. That's about U.S. production. It's also about using our reserves and working with producing countries around the world. That's exactly what we're doing.
Okay, well, here's the thing. You're not actually doing that. How do I know that? Because according to worldoil.com and Bloomberg, the Biden administration doesn't anticipate selling offshore drilling rights in the Gulf of Mexico through at least October 2023, effectively stretching a delay in that activity to a third year, according to economic projections included in its newly released budget proposal. The numbers show expected revenues from offshore oil auction bids and annual rental payments on existing leases are set to plummet in fiscal 2023 by about $370 million to just $25 million. That reflects the government's typical haul from 2 auctions of oil and gas leases in the Gulf of Mexico. The anticipated offshore leasing pause comes despite the war in Ukraine and high costs for oil, gas, and gasoline that have prompted administration officials to implore energy companies to pump more crude. The Gulf of Mexico generates about 15% of the nation's crude production. Based on the revenue projections in the Biden budget, there could be at least a 3-year gap in the sale of new offshore oil and gas leases, according to Eric Milito, the head of the National Ocean Industries Association. He said, it's pretty clear there are no new lease sales on the horizon in their mind from a budgeting standpoint until fiscal year 2024. So they're not even selling new leases in the Gulf of Mexico. So if you're a company and you're looking to invest, are you going to invest in that oil and gas company that can't even buy a lease in the Gulf of Mexico because of this administration? So at the same time, they're saying, you know what we need? We need to increase the oil supply. They're saying we won't even sell leases to drill in the Gulf of Mexico. That's unbelievable. Interior Department officials have maintained there is no longer a leasing pause. Under a court order, the Interior Department sold oil and gas leases in the Gulf of Mexico last November. But a federal judge later invalidated the auction after finding regulators didn't analyze its climate impacts. Though required by federal law, a new 5-year plan for selling leases is not on track to be in place by June 30th, when the current Obama-era program expires. This would translate into reduced oil and gas production of about 500,000 barrels per day between 2022 and 2040, according to an analysis released by the American Petroleum Institute. So they are actively preventing new drilling in the Gulf of Mexico at the same time that gas prices are spiking. These geniuses, these absolute flaming geniuses. The battle for the culture is heating up. We here at the Daily Wire are making some big moves. So be sure to like, subscribe, ring that bell, because you're not going to want to miss a single moment.